Hi everybody, Tom Williams here. Lovely to talk to you. Thank you, Peter. Thank you, Rita. Thank you, Dallas. Dallas in the background making coffee and tea for us, which I thank her very much for. Now, the S&P 500, this is it, the future, right in front of us. The cash market, sorry. Now, the future, sorry, yeah. Now, okay, we can see it persistently wants to go up. And we know when it's going up because this has historically tests. Every time you see a test, it goes up. Of course, if a test fails, right, say you have a test today and it fails next 2 days, then that's weakness. That makes sense. But anyway, I'm sure we must have shown this sometime in the past. But there's the base of our S&P 500. This is the stopping volume, look, here. We can see this high volume has come in here. Right. That means that when professional money like the lower prices, right, they then enter the market as the market's falling. They can't enter the market in the rising market because other professionals, they do not want to give anybody else any advantage, and that includes other professionals, especially other professionals. There are no friends in the stock market. As the old saying goes, if you want a friend, you've got to buy a dog. So, but there it is. That's why they have to buy in a down bar. However, we know that this has to be tested and a base built. So it goes sideways, there's a bit of supply there, they knock it back down, look. And that, we assume here, is a low point, the test here. This is a daily chart, so there's no actual signal on that, but there will be on lower time frames. Now, so we have a widespread up, but the significant thing is, what do we see here? A test. A red down bar. Now, if you were writing a book or an article on this, and you were asked to describe what a test was, you would say it's a red down bar on a narrow spread, volume less than the previous 2 bars, closing usually in the middle or high, and you've got some strength behind you. Okay, so there we are. There's the strength. There's the stopping volume. There's your, I suppose that would be a springboard, right? And we say this is a test. So we know, right, we now have a look, see what the computer tells us, right, on that, of that test there, look. So we look down here. What I say, the bar is down, yeah. Volume is low. Right. Spread narrow. God, look, it's closed in the middle as well. That's what you would write down in your book as a test. It's a test because you've got strength in the background. The bar is down. Volume is low. Spread is narrow. It's narrow because there's no selling pressure on the downside. And also closed in the middle, because there's no selling pressure. So lo and behold, when you see a test like that, there it is, look. It's a test because you've got strength in the background. And not to mention this base trend line here. Trend lines do work. They do give you support. Okay? You should burn that test into your memory, to your mind, because it's a very money-making thing. Now, lo and behold, we seem to have another test. Now, we've been mentioned this principle many, many times. When you see a red arrow appear, no demand, especially on no demand, and next bar looks like a test. It is a test. Professional money have seen that apparent weakness there. They just want to make sure they can't risk anything, right? So they test the market. And then so we see what the computer says about it here. The bar is down, volume is low, spread average. Sorry, the mouse keeps jumping around. Close in the middle. Every test won't exactly be the same, but that is a test. And why is it a test? It's a test because of this red arrow. The professional money have seen that, no demand, and we've got a test here, and we've got this buying here, stopping volume, right? So up it goes, up. This should be no demand up here. Look, the market is struggling. Well, it's not struggling, it's laboring, should we say, right? Now, we normally like to test, especially these red arrows. So I'll go to the next. What's that? Right, they are. Let's see what the computer says again. Bar is down, volume is low, spread narrow. Sorry, the mouse keeps jumping around. Close in the middle, that's the perfect test. That's what you would write if you were writing a book on what test looks like. Okay? Now up we go, still going. We notice, however, that it's beginning to, shall we say, labor. In other words, it's having a slight problem in making rapid headways, which is understandable. Don't forget these higher prices, professional money are very, very wary, okay? And there is supply here, they will be taking profits. But every time they keep testing, you will expect higher prices. So lo and behold, what do we have here? Right. Now this today's Friday. This was up to date to Thursday. So what's the computer say again? It says we've got a bar down. Volume is low. Wow. Spread is narrow. Wow. Close in the middle. You've got all those wows there, look. Right. Rita says there's some questions, but that's a test.
Okay. So a couple of people are asking about volume on the test bars. So Michael says the test bar closes lower than the high of the previous bar on low volume. But what if the volume was relatively higher than the previous two? How would you interpret that at the time? And then Robert says, can the test be on higher volume? Is it still a reliable indicator, especially on the futures market?
Sorry, can you say all that again? Sorry.
Right. The test bar closes lower than the high of the previous bar on low volume. What if the volume was relatively higher than the previous two? How would you interpret that at the time? Do that one first.
If the volume is higher. Well, don't forget, the system is called volume spread analysis.
Can they hear us?
Can you hear us? Peter says you should hear us. Yes.
Just Jason who's lost the sound.
Oh, okay. Okay, so it's volume spread analysis. So when you see a down bar and a narrow spread, right? Now, there could be no selling pressure there because that's why the spread's narrow. If there was any selling pressure at all there, the floor would be released and it would plummet down. So there is no selling pressure on these narrow down bars. Now, if the volume is low, that's fine. But if it's high, you've got to be flexible in your visualization what's going on. If it's high, then somebody's decided to move in and buy something. It's a price spread that's important. If it's narrow, it means that there's something in there supporting the market. You don't think mathematically. We don't look at mathematics at all. We're looking at these charts. We're visualizing what's going on our knowledge that these markets are driven by supply and demand. Professional players think nothing of throwing 50,000 contracts into the arena. So they have to be very, very careful. If it's a down bar and a narrow spread, right, if the volume's low, fair enough, it's no supply. But if you see an example of high volume when that happens, there will be some supply there, but mostly it must be buying. That's why the spread's narrow. Don't forget it's volume spread analysis or range analysis. What was the rest of the question, Rita?
I think the other one was, can the test be on higher volume? Is it still reliable, especially on futures markets?
If it's very high, you've got to look at the overall picture and pay attention, because it could be supply swamping demand there. So you have to tread carefully here. But what we've just seen what's driven this daily chart up like this. We look at this daily chart, it's been going up for some time, and the reason is that there was a buying at the bottom there on that trend line. Okay, we got signals there telling us this. If there was no signal there, we can still see the high volume coming in on red down bars. They must be buying. Nothing else can cause that. And then, once they get going, they like to test every now and again, just to play it safe. I mean, it's almost like you climbing up a roof, and you sort of have a stick and you push away in front of you the tiles, make sure they're going to support you. Remember, you're dealing with the activity of the professional players, and the whole market works on supply and demand. And you've got to, if you can visualize that going on, then you'll understand the market. Any other questions, Rita, there?
Not on that particular, no.
No, good. Anyway, this daily chart's up to date to yesterday.
Today's live running.
Oh, sorry, yes, sorry.
That's actually Wednesday we are now.
Yeah, sorry, folks, yeah. Oh, that's right, sorry. Yes, so that red down bar was Wednesday. Right. Not Thursday, was it?
No.
Right.
Next one looks a bit like a shakeout, sort of.
Right, okay.
It's Thursday.
Okay. Of course, the higher up we go, especially if we hit that top trend line there, markets will quite easily go what we call overboard. But a bull market, it's historically been doing it for hundreds of years, so I don't see why it should change now. A bull market ends with what we call a buying climax. The buying climax will appear on good news, right? It'll be an up bar. It'll probably be up into new high territory, right? The volume will be massive, right? It'll probably close in the middle, right? That will be what we call a buying climax. That will mark the end of the bull run. Then you would expect the market to whipsaw sideways as they distribute more and more and more, and they will be shorting more and more and more until the phase is accomplished. And then when the end of the phase is usually accompanied by an upthrust or a no demand up bar. It's usually an upthrust, but we haven't seen that yet. Trends run longer than you think they will, and that's what gets many people. They think, oh wow, it's gone up so much, it's got to come off now. But to their horror, it doesn't come off. It keeps going up.
Question.
Now, Rita made a good trade recently, which I'm sure she'll tell you about.
Can you,
Yeah. Yesterday was that.
Right, hang on. Rita says there's a question.
Yeah, it's about tests. Robert says, could one say that understanding tests is the main key to success using VSA? And my trade yesterday was on a test, and what I'm ultimately looking for when I trade is 20 points profit usually, and I take it and get out. And I trade the Dow, by the way. This is the Dow 1 hour. That was yesterday, and I'm usually looking minimum of a 10-minute chart usually to see a test. So if we've got once I've established there's buying in the background and we're in a rising market, I'm looking for a test to confirm that to me, and that's what I saw yesterday right there on that hour. In fact, on the half hour, well, I won't go to it, but on the half hour there was a test that had a test as well before. So there's a test, low volume, testing that volume there, and then the next bar went up, and then I took, and I was, after that we noticed that the market just went sideways for quite a while, and I went out, and then of course it took another move up, but I took my profit there. So that's a test in a rising market, and yes, they are very powerful so long as you have looked at the background. The background being that there's massive volume buying and that you're in a rising market. So yeah, test is confirmation. So Tom, Robert's saying, could one say that understanding tests is the main key to success using VSA?
Well, if you want to be successful, you've certainly got to recognize what a test is. Right, and they will test in a bullish market, but they may test in a bear market. So you've got to be fully aware of things like that. That's why we get what we call a fail test. But these tests will slot into the overall direction the market is taking. Remember, we don't have any formulas. What the idea is that you will learn to recognize something when it appears. And a test is just one thing. Stopping volume is another. Testing of that level is another. Testing, of course. Pushing up through supply to the left is another principle, which you see happening all the time. At the top of the market, we say if the market don't like very high volume on up bars, they don't like that, but if they test it, then you're going to go on up. They don't like these up thrusts. It looks like an up thrust on that chart. What chart is, Rita?
I was just flicking around. That's the 10-minute ES.
10 minutes. Oh, let's.
So it came off a little bit there on that, but still.
Yeah. Well, the thing is, 10 minutes is it?
Yes.
There's your high volume. Look, this is 10 minutes. First of all, note how the simple trading system works. All these blue bars happen as the market's going up. It's not put in there in hindsight. Well, it's waiting for the next bar. And the reason for that works is because if you are a professional player and you've bought substantial amounts down here, which they have, you can see it's high volume coming in, right? you make sure that every time it's marked up, right, you're in control probably. It's marked up, but the close is, you make sure the close of the price is higher than the close of the previous bar. Not the highs or lows or all that nonsense. It's the close is higher than the close of the previous bar. That makes the bar blue, and that tells you professional money is in charge of that rally, right? But because it got such huge amounts, when this high volume comes in, look, that's why we've got a signal there, look. Supply. What else can it be? Can't be buying, can it? Supply, if you wanted to unload several thousand contracts, you have to do it on an up bar. You can't sell substantial amounts on a down bar because the market makers and other people, they're all at each other's throats. There are no friends in the stock market. They will rapidly mark it down against your selling and you will lose money. So they have to do it on an up bar, right? Then we're looking for confirmation, and lo and behold, we have an upthrust. There's no signal on that one, but there will be on other time frames. But the market whipsaws. Professional money have to have movement to make money. That's why Rita and I, we like to, and Peter, we don't like to be in the market very long. What we're showing you is what scalping's all about. We're not talking about pensions and all the rest of it. We're talking about scalping. I mean, I could talk to you all day long about the market on these various issues. Now, even I've noticed continuous contracts that we have here. I was looking at that earlier on. Now, so okay. Ah, there are. Now, continuous, future, sorry. Now, say we look at that, look, 2 minutes. There's a 2-minute chart, look. And look, it's only 2 minutes, therefore you can't do a lot with it. But it certainly gives you an idea, look. There was definitely some support came in here, look, and there was some supply here. Can you put a weekly up, see what that looks like, Peter, on this? Yeah, this one.
This is the Aussie dollar.
Yeah, there's the Australian dollar, sorry. What time frame is this? Right. Okay, so, yeah, right. Now, funny enough, to me, that looks like a test. Now, there's a test with high volume, look, which is interesting. You just asked about that, look. Now, okay, what's the computer say, look? Well, we can see the volume's high. Okay, so it's a down bar. Volume's high. Right. Sorry, this mouse keeps flicking around, something terrible, doesn't it? spread average, close in the middle. Now it's volume spread analysis, so the fact is it closed in the middle on that very high volume must mean that there was some buying there. If that increase in volume had represented selling, first of all it'd been on an up bar, but it's a down bar and it's closed well off the top, the middle there. That's why you got higher prices. So it's very important to read these bars. Okay. Any questions there?
Well, Jerry quite a while ago said, this is talking about springboards, he's discovering that exact setup, the springboard, is the most common setup and makes almost the strongest profits. Right, hang on. Okay, Thomas is asking, do you look at the signals on the daily bars for an idea on direction for your intraday trades, or do you find them less reliable and just stick with the intraday charts when trading intraday?
Right. Sorry, what was the first question?
Well, it was about springboards.
Oh, springboards. That's right, yes. Now, springboards was the term used by Wyckoff himself, and I never used that term when I was making up this program, because what it really is a shakeout. They've accumulated for a few bars, you know, it can vary according to market conditions. Then they ram it down to put the fear of God in as many traders as possible that are wrong side of the market. It also triggers stops, shakes people out, all sorts of things. And that's why I always called it a shakeout. But it's in fact a springboard, which is quite a good observation. Now the thing is that what might be a good exercise for you is when you see these principles, right, like springboards and testing, ask yourself a question. Even write it down. Why didn't I go in and trade that? Ask yourself a question. Why didn't you? If you're walking up the road and you see a gold sovereign lying on the ground and you don't bother to pick it up, why haven't you picked it up? What's the reason? You know, and it might be a good question to ask yourself in the market, because people are annoyed naturally when you miss these obvious principles. So ask yourself a question: why didn't I actually take advantage of that principle, or at least recognize it? So, quite right, shakeouts, springboards, very, very good principle. But you must have stopping volume. You must have lower prices to encourage professional money to enter the market. Then you wouldn't do it, would you? You wouldn't enter the market unless the prices were attractive to you, lower down, especially when you're talking about thousands of contracts. So you can't expect them to. So keep all that in mind. What was the second question, Rita?
Do you look at signals on the daily bar?
Well, I always like to look at the daily chart. I must admit that this daily chart on VSA is extremely good. And of course, if you see a principle that's clear on this daily chart, then you can bet your bottom dollar that thing's going to go up or down on that principle. So I always like to look at the daily chart. And of course, you've got the KG chart that works on this daily chart, right? You've got your trend lines, you've got your overall trend of the market. So certainly well worth looking at the daily chart. if you see a test in the daily chart, then at least next day, when you're looking at your lower time frame, hour, half hour, 20, whatever it is, you'll have in the back of your mind that the overall market looks bullish or bearish, whatever it was. And that will help you recognize something when it develops. Right?
Yeah, so I always look at the daily charts first. If you've got a test in the daily chart, then you've got a very good idea that the next day may well be up. And so when looking for trades, if you're perhaps looking for the best move, you were looking for strength in the market. And was it, Peter, the last 2 days, today and yesterday, we've been watching it, and you know, at the market open, they plummet right down, and then lots of buying comes in and it takes the bar, it moves on up, doesn't it, Peter? So if you can find that moment and catch that move, then that's, so it is good to know, to have an idea of the market and always following the trend. So daily, the trend is up. So we're actually in a bull market in general. So you can catch down moves, but you're safer in a bull market to be looking for strength. And Jason says, does this happen the same in the spot Forex market? Yes, it does. All the VSA principles work the same in the spot Forex market as they do for any. Exactly the same. Tina is saying, is no demand the opposite of a test? Yes. Do you want to say some more on that, Tom? Or yeah?
Well, don't forget, the principles we follow are simple, logical principles. You don't have to be a rocket scientist, right? I knew a gentleman once who you'd be pushed to write a letter, and he made a lot of money because he was a trader. Now, I'm looking here, this is only a 3-minute chart, look. And lo and behold, look. That to me looks like a test. It is a test, isn't it?
Yes.
Okay. Now, okay, so we'll see what the computer tells us. Right? Okay, so the cursor is on that bar. Bar is level. Now that's slightly different, isn't it? So usually the bar's down, but look, it's the level, that's why it's gone black. The bar, the color of the bar is black. Here we are. A bar is level, right? Volume is low. Wow. Low volume, what does that mean? Must mean that when it went down there was nobody selling. Wow, the spread is narrow. Oh, why is that? It's narrow because people are supporting the lower end of it. Wow, it's close high. Well, we can see that. That's why it's colored black. So that's a test look, and this is only a 3-minute chart. How's that for scalping? There's even a signal on it, look. Test has to be. Yeah, test in the rising market. So even the programmer, when I started giving him instructions, he said, well, that's impossible. He said, you can't expect signals to be the same on a 2-minute chart, 1-minute chart as an hour chart. Now, these are intelligent guys, but they don't understand what we understand, right? And especially programmers, because they're stuck on all this logic and 2 and 2 make 4 and all this business. Funny, every time I say 2 and 2 makes 4, I heard it, well, Peter told me a joke. He said at the School of Economics in London, there was 10 graduates, right? And there was one job advertised. So they all went for the interview. And they went in one by one. And they sat in front of the so-called board. And one of the questions was, what does 8 and 8 make? 2 8s, right? So they all gave the, what they figured, well, 16, right? Anyway, one of them, none of them got a job, but one of them did get the job. So they all crowded around him and said, well, what did you say when they asked you what 8 and 8 made? Well, I just said to them, well, what number do you want? And that about summed it up, and he got the job. Anyway, I lost my way now. What were we talking about? Oh, testing. So these tests come along, look, in all these different time frames. There's nothing special, nothing mathematical about them. You need to recognize them when they appear. When they appear to you, then you should recognize that as a test. Same as you recognize weakness when it appears. Okay?
6C up over 4 hours, said Peter. Gregory's here and he says the 6C on 4 hours looks promisingly weak. Oh, here we go. That's the Canadian dollar 4 hour.
Who's that, Gregory?
Gregory says it looks promisingly weak.
Yeah, well, Gregory, you obviously look dead right. It does look weak, without question. Now, Gregory is one of these high-ranking programmers that understands how VSA, how the markets work, right? So lo and behold, markets don't like ultra-high volume on up bars. Why? Because professionals have to sell as the market is rising. And it's what we call supply is entering the market. That's weakness. Now, they probably can't sell everything they want in one move up like that. So they have to hold the market up somewhat while they distribute more. And you'll find on these red down bars there's little or no pressure. Now, we don't get fooled into saying, well, that's a test. Right? Why? Because we've got this right behind us. So we're not fooled at thinking, oh, that's a test. Because it's too much of a good thing, this. Markets don't like the ultra-high volume and up bars. And as the market goes sideways, they hold it up, look, by lack of selling, they hold it up. Every time it tries to go up, look, right, there's weakness, probably no demand, right? And then lo and behold, what did I say? I mentioned this to you earlier on, right? They usually have what we call an up thrust just before down move. There we are. Okay, now these signals were written at least 10, 12, 13 years ago. And they're still working. They always will work because this is how the markets work. Computers don't understand flaws in your thinking, flaws in your logic. You've got to get it right to produce decent signals like this. Otherwise, it doesn't want to know. And that's a sign of weakness. Of course, Gregory is the type of guy, he's very smart, right, and he understands these markets, how they work like this. That is definitely a sign of weakness.
Just going to put up more bars, just so we can see perhaps what this person is talking about. Right, so I'm just going to say, okay, Ty says, but to me it looks like it pushed through supply, and as it's holding its gains, it's absorbing the residual supply. What do you say about that, Tom? Can you see it's gone?
Well, I mean, yes, it's nice thinking like that, but the upthrust tells us that that's not correct. The upthrust then tells us that that is weakness. Markets don't like this ultra-high volume and these up bars. And there it is there, look. Right, and the computer, right, it must have come up. There must be a lot of logic in there.
Which one are you going on, Tom? That's supply coming in.
Yeah, there must be a lot of logic written into that for the signal to come up like that. Now these are just mini upthrusts, but the confirmation that that is weakness, of course, that is serious weakness. If this was absorption volume, right, you'd have a test here, certainly a test somewhere along here. We don't have a test. All we've got is it being supported as they sell more on every wave up. And they're certainly not buying, they're distributing. It takes time to distribute. It takes time to unload those thousands of contracts that they hold. So they have to hold the market up. But the upthrust there is definite confirmation that you're looking at weakness there. Certainly not pushing up through supply to the left.
Also, Grigory is saying on the first high volume bar, the volume is highest for almost 2 months. So therefore on 4 hours it means something. Do you want to comment, Tom, or no? That's true. Correct. Yes. Great. Thanks for pointing that one out to us, Grigory. Okay. There's another next question. Jim is saying, besides tests, what should one look for in a change of trend? Can you use the agriculture market as an example, perhaps wheat or corn?
The answer to that is definitely no. Simple question. No, no, no. You've got to learn to read the charts. Don't start picking up tidbits of information that you may pick up at various places. That's definitely no. The only what's the word, like gold, it falls when the S&P is going up. Doesn't always, but usually, generally speaking, it does. But forget about all this business about if corn does this and that, all the rest of it. You must read the chart. If you're a professional trader, you have to specialize in one area, not 2 areas or 3, one. And if you get a corn trader, he probably doesn't know what the price of the S&P is. That's what they trade. That's what they specialize in. Okay, so don't get tangled up in all these ideas.
Okay, Jerry says, Tom, yesterday I was trading Apple and it displayed classic VSA distribution pattern after the high volume up bar. It had upthrusts and no demands before going down. However, in this example, I was fooled as the sequence of these bars were near parabolic rather than going horizontal, as I find most of the time. Would appreciate any comments on the sequence of distribution continuing to go up rather than sideways. You'd have to see Apple. what time frame? Because I think we can only have daily, can't we? Here we only have
Get Apple up
well,
On your data. Yesterday. Can't do it intraday.
just putting up. We've only got daily data for the daily Apple chart, I'm afraid. So I'll just show you more bars, Tom, and then.
Well, all really interesting is here.
Okay. That's 20.
Now, Rita, what was happened? This is Apple, a daily chart.
Trading Apple displayed classic bear same distribution pattern after the high volume up bar, with up thrusts, no demands before going down. However, in this example I was fooled, as the sequence of these bars were near parabolic, I don't know what that means, rather than going horizontal, as I find most of the time. Would appreciate any comments on the sequence of distribution continuing to go up rather than sideways.
Well,
What time frame is? Oh, he was on the 15 minutes.
yes, to be quite honest, we're very sorry, but I don't have intraday charts of that. But to me, Apple looks strong. Oh, look, lo and behold, this was 3 days ago, look. What do we have for a test? Bar is down. Volume is low. Right, so there's no selling pressure. Sorry, I just keep jumping around. Volume is low. Wow, the spread is narrow. It's closed low, but there's narrow spread. Don't forget it's volume spread analysis. There's no selling pressure there. Right, that's why it went up. Now, we are a little bit overbought. So there might be some hesitation here. But it's certainly nothing like distribution, I'm afraid. The word distribution was mentioned, but that's not distribution.
Sorry, the phone's just gone. Hang on one moment.
Hello?
Okay. No, yeah, so because we don't have, we only have daily volume for Apple. But when you're talking about a 15-minute chart, I can only perhaps guess, or even a 5-minute chart, that that in and obviously the price, the market goes up and down during the day, but that's why we were talking about looking at the daily chart. We can see that in the daily chart the trend is most definitely up. So we're in a bull market. So in small time frames you might see distribution or the price moving down, but the overall general move and the overall trend on the bigger time frame is up. So the way I look at it when I'm trading a 10-minute chart or a half-an-hour chart is the bigger the time frame, the more powerful it is. So there's more fuel and power in an hour chart. A test in an hourly chart is more powerful, is going to drive it further, the price up, than a test in a 3-minute chart. You might get a test in a 3-minute chart, but the 3-minute really kind of moves up and down. So I don't know if that helps, but Gregory's saying, could we try to put, I'll have a go, but I don't think we do. Gregory's saying try and put it up, but I don't think we do get the data. No, we don't, sorry. So no, we don't get the 15 minutes. All right. I'm just looking at the question. Sorry, I'm trying to read the next question from Edmund. We were on the 10-minute ES chart somewhere, and this is a question pertaining to the 10-minute ES chart. I'm sorry, I'm sort of right. Edmund says, if the high volume up bar closes at the top, would the sign of weakness signal still appear? You get that, Tommy?
Yes, it will. If there's any strength in there, right, when you see these high volume on these up bars, after the market's moved up, don't forget you're vulnerable to one or more professional groups getting nervous and wanting to unload, and that's, they unload on these up bars, right? If that was any strength in there, you'd see a test fairly quickly, right? But here you don't have a test, you have an upthrust, look, which is a sign of weakness. And here this looks like no demand, look. So that whole chart looks, this is 10-minute, is it? What of the, yeah, sorry. So right now because we have testing in the background on the longer time frames, right, and it's Friday, and crucially the market in America's closed Monday, I believe. That means they'll want to mislead you as much as possible. They will do their utmost Friday to mislead you and as many traders as possible. And the idea is that over the weekend they'll have TV reports, they'll have newspapers that you know far more than they do, believe me. So they'll come out with all sorts of weird stories that are based on what actually happened Friday, right? But they know that. So if they have an upthrust or whatever, well, they may even have a shakeout, because Friday you've got to be very careful, especially a Friday before a public holiday, like I believe you have in America. I believe it's Labor Day, isn't it? Sounds, Monday. Sounds like the old unions having a go. Labor Day.
Right. Jim, corn. Hang on, let me just read. We can bring up the corn continuous contract, can't we, Tom? Do we have to go to the end of the day? End of day we need to go to. Corn, yeah, we need to go to. Right. Yeah, is it updated?
Yes.
Yeah. Continue. I mean, let's see if we can answer your question. From Jim. I mean, the daily chart of corn US market ETF, Peter. Am I on the? I'm not on the right. Corn, daily chart of corn US market ETF. We haven't got that, I'm afraid. We only have. We have this, yes. So this is a continuous. He says on that chart, there's a high volume down day closing in the middle. There is. What day is it? That day? Do you mean this particular one that Tom's on now, Jim? Is that the kind of thing one looks for to see a change of trend in a daily chart? Well, forget the idea of a daily chart, any chart. So the principles apply to any chart. Tom?
Now that's good observation, because that particular bar there looks definitely like no selling pressure. Now there is a yellow box there, look.
It's going to be test. Shall I bring it up? Hang on.
Yeah, go on.
Oh, it's going to be strength coming in.
Strength coming in. So that's good observation. And because of that bar there, is why it's gone up 2 bars. And it's even gapped up, look. Now, admittedly, you've got a nasty kind of top reversal here somewhere, right? But don't forget, when you're looking at these commodities, you need to specialize. It's no good jumping around from corn to cotton and all the rest of it. You have to study one particular commodity and become an expert at it to know, be familiar with how it behaves. Right? Okay, so, but that is good observation there, definitely. That is definitely a sign of strength. Now, if you see a test of something along here, then that's definitely going to move up. So it's very good observation. Excellent.
Could you actually say, Tom, that the next one toss, or am I being trying to see things that are not there? This one.
That's not bar. That's, yeah, no, well, you're looking at this. This is why it's gone up. Right? It's gone up because here it's closed in the middle and spread and narrow. Look. There's just a slight little bit of volume there, but that's buying. And that's why it went up. Right? Now, for this to go into a nice bull move, you'd probably expect it to retest again somewhere. And when you see that test, remember what test is. It'd be a red down bar, volume will be low, spread will be narrow, probably close in the middle. Then that's going to go up. Why? Because you've got this in the background. And there's probably some buying back here. Look.
Gregory's mentioning that we have that shakeout.
Yes, well we do, yeah. See, what is a loss-making procedure is, you notice it's a time element. I mean, there you are sitting there, this is a daily chart, itching to do something. And a week goes by as if nothing's happened. 2 weeks go by. It's a time element. So you have to, that's why hopefully we have a new software that will alert you automatically where these signs of strength or weakness are.
Yeah, so Jim's saying, perfect answer for me. I now understand better to wait for the test after the COT. What does that stand for? Change of trend. Yes, that's the most, a safer, it's a confirmation. Yeah. Yeah, you can go, I mean, yeah, I wait for that. Then I know I have confidence, because it's very easy if you don't go in on a clear principle in the market, it's very easy to lose confidence yourself, and often, you know, they will push the price against you, and unless you've seen a true principle that you can trust, you can have your confidence knocked, and obviously, you know, jump out or a loss or whatever. So yeah, you must wait for confirmation. It's the safest and wisest thing. Sometimes you're sitting there and it can be really frustrating because you don't see it, and it, I mean, I sit and I've watched it just run, and there's no confirmation, and that's the way it is. But I prefer to be safe as we can be then anyway. Grigory's saying we get paid to wait. Yes. Oh no, so Tony, we get paid to wait. Grigory Moscow. I don't know what that means, but okay. Hang on, let's just Tom, you, when he said it, all right, we get paid to wait. He said it on 24th of March 14. I did not tell anything. Don't know. Don't worry. Or maybe that was, you mean Gavin. Sorry, I'm having a conversation between two people who are typing messages into the, and probably the rest of you are sitting there thinking, what on earth is... Anyway. Robert, a long time back, when you were talking about tests, high volume tests, Tom, do you remember that? He says, do we always need a second test after a test with high volume?
Well, I have to see the chart to answer that one correctly, because these markets, some markets do need to test, some markets don't. But the whole idea is that you learn to recognize something when it appears. Right, I mean, if you're a wild animal out there and you only eat mice, if you're an owl or something, right, you learn to recognize a mouse when you see it. And you grab it. Does that make sense? Quick off the mark. A very good thing is you look back, and if you've missed a principle, like an upthrust or a test or something, say to yourself, or write it down if you can, why did I miss that? Why didn't I actually leap into action? And if you ask yourself that question, it may help you. You think about it. If you get this right, and you will make all the money you ever want, and you'll have that ability with you for the rest of your life. And I can assure you, you'll never ever regret it. Never. You can forget about mathematical formulas, you can forget about news and all this nonsense that they talk about. Markets work on supply and demand. All right. And if you think the automatic signals are fairly good, right, you can't fool the computer. You must have fed in the correct information in the first place for the computer to respond to it. Right? And produce a signal. It hasn't got a mind of its own. It's just doing what you've told it to do. It's as simple as that. So keep plugging away. It can be a bit confusing at first. I think even Rita here now, I think it took her about 2 years to get to grips with it. The same thing with Peter here, it's taken him a couple of years. Right? Sometimes it doesn't pay to be too clever, which is a kind of interesting thing. You've got to learn to read a chart, believe a chart, not start reading anything into it that may not be true, may not be there. Now, we'll have to pack up now, and I thank you very, very much for listening. And have a nice holiday if you're in America. And I won't say good luck with your trading, because there's no such thing as luck in trading. You either got the fact right or you haven't. Okay.
Okay, thank you, Tom. Yep. No. Yeah. Just to clear up that confusion, Grigory, apparently, Gavin said in one of his webinars that you said we get paid to wait. It was in, and it was a weekly chart Aussie dollar in May, and it's true. Get paid to wait. It's worth waiting, and that's the hardest thing, waiting, because us human beings are impatient. So yep, okay. Well, we'll see you next Friday. Well, we won't. Yes, we're saying we won't see them, but you'll hear us next Friday. We'll do the newsletter this Sunday, won't we, Tom?
Yes.
Yeah. Okay. So look out for the newsletter in the VSA Club, and we'll see you again on Friday. Thanks. Thanks for listening. Bye-bye.
Bye, listeners.